Hello, and welcome to a special edition of Crypto Analysis in the Morning. It's not actually in the morning, it's in the night. So, this is actually Crypto Analysis in the night for the first time. Now, I was just doing some analysis on the market and I was looking at this new coin, NEO, and wondering whether the market is going to see some more downside pressure and we're going to break through the support and go down even further. Now I'm just looking for potentially which would be the best coin, and I haven't done any analysis on Neo, so I thought it would be a good chance to talk about all of the indicators that I use and go through them one by one. So we had a naked chart, and then I placed a line where I believed the support is on this market. Now, before we get going, I'm not a financial advisor. This is not a financial advice. These are the thoughts that are in my head and what I believe is happening in the market. So as I was saying, this line here is like an acting of support. It's a support line. We've seen price come down here before, try and break it, but couldn't break it, went back up again, came back down, tried to attack it again, couldn't break it, reversed, came to attack it again, stayed here for a while, but reversed. Again, it's not making new highs, it's just making similar highs. The market is going sideways. So I don't want to get involved really with a market that's going sideways. But what we want to see is if we do break this support line, we need to see some panic selling. So we need to see it break here and sell to at least, I'd say down to the 32. But let me fib this move. So we draw a horizontal line just to see where we say. So we come down to about 32, 32.56. We'd like to see a move somewhere like that, something from 37 to 32 coming down to here. And then, actually I think that's too far. Around 35. If it came down to 35, that'd be a significant move. Looking for a pullback back to the support, which would now act as resistance. We would jump in there for a move down further. But I just want to fib this move at the moment on a longer time period. Let me move it to the 1 hour. So as you can see, the market has been in some serious pressure. If we fib the last couple of days, we don't really have the bottom of the trend. We can't really analyze anything. It looks as though this is going to break through this level. Now we can only trade what we see, so we need to see it break through and come down to our support line here before we think about getting involved with NEO. But we'll set an alert. Actually, won't do that yet. We'll talk about some more trading lines. So the next line we want to look at is the 10-day moving average. So it's Lincoln Studies 2, moving average, and 10 days. We'll make it black, so it looks like the rest of my charts. Boom. So now I've got the 10-day average. So you can see how price how price is being held up by this support line, this 10-day moving average here. But if you move it down to a 30-minute chart, it's no longer a 10-day, it's 10 candlesticks average price. So as you can imagine, this is what they call a lagging indicator. And the reason why it's a lagging indicator is because for it to print, it needs at least 10 candlesticks before it can get an average. So that average will be placed at the first candlestick in the series of 10. Then when it gets the next day's candlestick down here, then it will be able to print the next average. So it's always going to be a lagging indicator, which is a candlestick behind. It does give you an indication of the market because you can see it broke the 10-day moving average here, and then it moved sideways. It came to the 10-day moving average, wasn't able to break through it, and we carried on moving in the 10-day moving average sequence. But it's a self-fulfilling prophecy because if price is going down, so is the average. So that's when we bring in another average line into the picture. So we look at studies 2, moving averages, and we're going to do 50 days. We're going to do it yellow. So now we have the 50-day moving average, and if we move out a bit, you can see it's a bit clearer. So when we had this price rejection on this support line, we've seen price buy up all the way up to 40, and then hover around, a lot of volatility around the 10-day moving average line, and then shoot off again up to, I'm not sure what that is, maybe call it 42, 43, but then subsequently from there come down, and you can see where the average lines crossed over. Where they crossed over, we've seen a sharp sell-off, and when they've crossed over on the upside, you've seen a huge buy. So you can see that a cross of these average lines can signal a large move in the market, but not always. Sometimes the crosses don't signal a movement, and the key is trading the ones that do. And the ones that do are the ones that you need to watch out for when price breaks a certain support or resistance level. So in this case, if price was to break through this level, we want to see this aggressive selling down to here, or even further, and then a pullback back to 36. If we see that scenario happen, we'll be happy to get in a trade, potentially, on the pullback. Now, let's add another line to the chart. So we've got the 10-day moving average, which is the black line. We've got the 50-day moving average line, which is the yellow line. And now we're going to add a red line for the 100-day. I keep saying day, but it's not day. It really does. It is that number of candlesticks. So this is 50 candlesticks was the yellow one, and the red one is going to be 100 candlesticks. It's only day if you have it on the daily chart. Now, when I was talking before, I was talking in regards to the crosses of the averages being quite significant. Now we've added a second line into the chart. So as you can imagine, the 100 moving average crossing over the 50 moving average will signal that sentiment, so it crossed over here, sentiment is negative. People believe this market is going to go down. Now, if it crosses on the upside, people believe that the market is going to go up. So as you can see, where it signals that the market is going to go down, it moves sideways for a bit, you could have got your trade on and then capitalize on this downwards movement. But now we're looking for another chance to get into this downward movement because we believe now the market is going down, is a break of this support level, which would further confirm our bias of this market is going down, and then it needs to make a lower low. So lower than the low it went before, which was down here. So if we see a low of 35, then that will further reinforce our bias that this market is going down and would need some attention, because it may be an opportune time to make a trade and try and get in on the pullback to 36. Now, when the pullback happens, it may not get back to 36 and we may not get in and we'll miss the trade, but that's fine. What we like to see is that the market move in scenarios that we're familiar with, and we're looking for that perfect setup so that we can trade our plan so that we can be consistently profitable. So now that we've got all our moving average lines on the chart, we're going to now add the pivot points. So you go to studies 2 and pivot points, and then you change this to Fibonacci, and then you hit submit. So now I have these additional lines on my chart. This one is the daily pivot, shortened to DP. And daily pivot generally shows, I'll show you in a longer time frame, 1 day. So here we see. You can see that when price gets to DP, it could be an indication of where price is going to go next. So as you can see, it broke through and it was quite choppy around, because inside these moving average lines is quite choppy, because some people trade off the 100 MA. They say, if price reaches the MA, I'm going to sell it. Now, all traders that did that at this point are making good profits. It's a good strategy. That we've seen a pullback, it came up to the 100 MA. Everybody that was following that strategy where they sell at the MA would make good profits. Now, what we try to do with our trading techniques and strategies is to try and make sure that we trade in the direction of the trend and when all market participants are also trading. And the way that we can see that is when we see these large candlesticks of price action. So let me show you. So this kind of area would be a perfect time to place your trade. You're seeing good action in the market and the ability to get your trade in front of that action and make profits. So just to explain the last lines on the trades while we've got it open. So as you can see, the black line is DP. So DP is our major line of support and also resistance. But as you can see here, it acts as resistance. It came up, couldn't break it, came up again, it tried to break it, and then subsequently sold off quite aggressively, right down to its lows of where we are today. Now, it's come to DP again, it's broke it briefly, but then broken down below, it's hit the 100 MA, and then subsequently sold off. So now what we want to see is the market make that come back again to the 100 MA. And it may break it this time and carry on going. But we have to let the market do its thing. We can't second guess it. We don't know what it's going to do. Now, if we see it come up to the MA and we see the following red candlestick like it did before, we may be teased into a short trade, because that's what happened in the past. Now we may get it wrong and it may go against us, but that's one trade of many. And the key is to control your balance so that you are winning more trades than you're losing. But that's not the case. You can actually lose more trades than you win and still make good profits in the market. And I'll show you those techniques in my private Facebook group. You can get access by clicking the link below this video, and it will take you to the Hidden Wealth Blueprint, where I'll talk to you in regards to how to get access to all of my analysis videos, my mastermind group, my membership site, and my private Facebook group, all at the Hidden Wealth Blueprint. So go ahead and click the link below. I hope you've enjoyed this analysis video. Happy trading.